What's up everybody, Nate here. So we've been talking about the Federal Reserve on this channel for a long time now, and that's because the Federal Reserve can't stop making major changes to our economy just about every day. And while over the past few months we've seen the Federal Reserve make some huge announcements and how that has affected the stock market and the cryptocurrency market, those are not the only two things that the Federal Reserve is affecting here. In fact, a lot of these policies that the Federal Reserve is pushing in 2022 is sending the housing market into a whirlwind. Many experts from all over the US now believe that the housing market is going to tank in 2022, mainly because of the Federal Reserve and its interest rate policies. Not only that, but a lot of the bond buying and asset purchasing that they've been doing on Wall Street is now sending the housing market into turmoil. And because of that, things are about to flip. So today I want to talk all about the housing market and how these new Federal Reserve policies are going to affect it in 2022. We'll also be discussing how that is going to affect our economy this year, and if the housing market is actually going to boom or completely bust. So if that sounds good to you, then do me a quick favor and smash, hit, or destroy that thumbs up button below. And be sure to hit that notification bell too. Both of those things are completely free, and they show me that you want to see more videos just like this one. But obviously, the housing market has exploded since basically the pandemic started. And part of the reason for that is because interest rates in the United States are super low right now. They're low because the Federal Reserve set their benchmark interest rates near 0% in a response to the pandemic actually shrinking our economy. And with interest rates so low, people were able to go out and get a mortgage and potentially save hundreds of thousands of dollars over the lifetime of that mortgage. Now, in 2022, that all might be changing because the Federal Reserve actually wants to raise its benchmark interest rates. Now, it's talked about raising its interest rates for a few months now, but as of recording this video in February 2022, it hasn't actually done that yet. Experts and investors are on the fence about when and how much the Federal Reserve is actually going to raise its interest rates. But most believe it'll be by around 25 basis points starting in March of 2022. Now, you're probably hearing me say that and hear me say the housing market could go down in 2022 and think, Nate, the market in my area is crazy right now. You don't know what you're talking about. And yes, the market in the United States right now is still insane if you're looking to buy a house. We still have crazy low inventory and interest rates haven't gone up yet. So that means Americans all throughout the country are still in a frenzy to go out and buy a home. However, what I'm saying is that is potentially going to change as interest rates start to go back up. You see, when the Federal Reserve dropped its interest rates, it wanted to incentivize people to go out and spend money. And it was super easy to do that when rates are low. You could go out and get a loan or borrow on margin in the stock market and buy basically whatever you want on Uncle Sam's dime. That was to keep our economy from hitting near depression levels. And remember, we actually did go into a recession in 2020. It was the shortest recession in our nation's history because of all of the money printing. But all of that money printing wasn't for free. It has long-lasting effects, and dropping interest rates is still affecting us today. Now, with the Federal Reserve starting to raise its benchmark interest rates in 2022, that is going to have massive implications on the housing market. For one, it's going to be a lot harder for people to get a home. What lowering the interest rates did was allow a lot of people who couldn't afford a home to finally get one. If you're going to save hundreds of dollars every single month on your mortgage because your interest rate is super low, then you're finally able to go out and get that home because you can now afford it. However, if the interest rates go back up, you can't afford that house anymore. So this is immediately going to cut a ton of Americans out of getting a home in 2022. Number two, with a lot less people applying for mortgages, you're going to see the prices in the housing market essentially get slashed. Now, that could help a lot of people to go out and get a mortgage because prices are actually starting to go down. But it really just depends on how high the Federal Reserve raises its interest rates. Because if the Federal Reserve raises its interest rates much faster and much more aggressively than we are anticipating, well, it might not matter how low housing prices go. But for some Americans, interest rates will still be low enough for them to go out and get a home. So really all raising interest rates is doing is cutting more people out of getting a mortgage in general. So to say that housing prices are going to go down because the Federal Reserve raises its interest rates, well, that might not happen. We might still see a ton of Americans buying homes and buying every home that's on the market because we have such low supply right now. And just because we have such low supply and such high demand means your price is going to be way higher than what it should normally be. Now that in itself could have a lot of other massive effects on our economy in 2022. Raising interest rates is obviously going to hurt a lot of industries and markets throughout the country. I mean, we've already seen how the Federal Reserve announcing that they're going to raise their interest rates aggressively in order to fight inflation has affected the stock market and the cryptocurrency market. In fact, the S&P 500 had its worst month in January 2022 that it's had since March 2020. And we all remember what happened back in March of 2020. And I mean, don't get me wrong, there are a ton of other factors that are affecting the market right now. It's not just the Federal Reserve. But to say the Federal Reserve is not affecting the market at all is just not the case. But with that being said, what that ultimately means is a lot less money circulating throughout our economy, because now banks won't have as much money as they did before because they're not getting a lot of that mortgage money, which means they can't bundle all of those loans into mortgage-backed securities, and we'll get into those in just a second. But with less mortgages being sent out in general, that means that banks and financial institutions have to be a lot more strict on who they give a mortgage to. In 2020 and 2021, it was easy to give out a mortgage loan because just about anybody qualified for one. Now that free money and those interest rates are starting to go up, so it becomes a lot more risky on banks to give anybody a loan. They have to be a lot more careful. So not only will you start to see the benchmark interest rates for the United States start to rise because of the Federal Reserve, you'll also start to see bank interest rates go back up too. And their interest rates are probably going to be a lot more aggressive than the Federal Reserve's because it's their money that they're borrowing, not the country's. That means everybody's gonna have a lot less access to money, especially somebody that's gonna go get a loan of any type from a bank. And what that means is more shrinking. Now, one of the possible solutions to this interest rate problem is to have more houses. If we have more houses in general, then banks and other financial institutions could actually lend to more people, which means they would be able to keep their interest rates lower for longer. So instead of giving out a few interest rates at a high level, they could actually give out 5 times that many and keep their interest rates lower. And what that comes down to is building new homes. And we're starting to do that with some predictions saying that we're going to build 7% more homes in 2022. That's a good start, but it's hard for builders to actually get the space right now to build homes. And that's one of the biggest problems that the United States has faced when it comes to home prices over the last 50 years or so. That is one of the reasons why home prices have not kept up with salaries and wages over the last 20, 30, and even 40 years. There is a finite amount of space on this planet, and there's an even smaller amount of space in the United States that is left for people to build new houses on. That in itself, that means every single new house that's built is going to be expensive because you're literally taking more land and building a house on it. And remember, not every home in the United States is for sale at the same time. So we're always going to have a limited supply. But with the Federal Reserve raising its interest rates, you might see a lot more homes either taken off the market or sold for a much lower amount. Now, home prices since the start of the pandemic have actually gone up by around 18 to 20% on average. Those home prices are most likely going to depreciate this year, at least by a little bit. But for the first few months of 2022, they're probably going to explode and continue to rise. It really all just depends on what the Federal Reserve does. Now, the Federal Reserve is doing one other thing when it comes to the housing market in the United States. Not only is the Federal Reserve raising its benchmark interest rates, but it's also cutting the amount of mortgage-backed securities it's buying on Wall Street. So this was one of the other things the Federal Reserve did when the pandemic first started. They started to buy hundreds of billions of dollars every single month in corporate bonds, treasury notes, and mortgage-backed securities. The reason they did this was to lift up all of those markets in the United States. If those markets essentially tank, well, then you're going to have a bigger problem than just the pandemic. And I kind of mentioned this before, but when a financial institution like a bank or a credit union gives you a mortgage, essentially what they do is they take that money from the sale and from the loan, and then they package it and sell it on Wall Street. So as soon as that loan is gone, banks essentially don't see that money anymore. They only see the residual value from the stock market. And it's just another thing for investors to buy and invest in because mortgages are typically seen as a pretty safe investment. I mean, most Americans are going to make their housing payments every single month. But what happens if they don't do that? Well, that's sort of the other issue that the Federal Reserve is trying to address right now while still addressing inflation in the United States. You see, inflation hit a new 40-year high of around 7% by December 2021. It's the Federal Reserve's job to make monetary policies that sort of curb inflation in the US. They can't have no inflation because that would be bad for them and it would be bad for a growing economy. But they also can't have too much inflation because that means you have overspending and supply chain issues. So the Federal Reserve has decided to get aggressive on inflation. They want to lower it back to that 1 to 2% level that they consider to be healthy, but they also can't raise their benchmark interest rates too fast or pull all of their asset purchasing on Wall Street too quickly, because if they do that, then markets will tank all throughout the country, and that is a lot of money lost. And that includes mortgage-backed securities, because remember, banks are connected to these mortgage-backed securities, and so are investors. And now the Federal Reserve has announced that starting sometime in the spring 2022, they're going to completely be done with all of their asset purchasing on the stock market. That includes the mortgage-backed securities, so all of that hundreds of billions of dollars that they were pouring into those securities, well, that's going away too. That was lifting the housing market because this was pushing banks to try to get people to buy a bigger home, a better home. More importantly, to spend more money. The bigger the mortgage, the bigger the mortgage-backed security that the banks can sell to investors on Wall Street. So with free money just going everywhere in our economy, banks were pushing people to buy more, and that continued to send the housing market further and further up. And houses were selling at blazing speeds with prices even hotter. But like I said, that money is disappearing, so what are banks and financial institutions going to do now? Well, they're not going to be pushing people to get a bigger home because now that's riskier for them. Banks are just playing with their money here, so if they start giving people way too much house and all of those people start defaulting and foreclosing on their homes, well, that's going to be bad for the banks, and it's going to be bad for the mortgage-backed security market. So now, how is all of this going to actually affect the housing market in 2022? Well, the fact of the matter is we just don't know what the Federal Reserve is going to do with its interest rates and its bond buying and asset purchasing on Wall Street. They haven't technically made an official announcement about how high or by how much they're going to raise their interest rates and when exactly they're going to stop their asset purchasing. If they do it at a lot slower of a rate, then that could mean the housing market actually continues to level out because everything will kind of happen at the same time. However, this is all at the risk of rising inflation, and that's something that the Federal Reserve is going to have to address as they look at the housing market, the stock market, and the crypto market. If the Federal Reserve is way too lax on its policies, well, then we could see inflation hit new record highs in 2022. We could even see periods of hyperinflation in certain markets where the price of things is getting way out of control. However, if the Federal Reserve does things way too fast and gets way too aggressive on inflation, well, that could be bad for the housing market too, because think about it. Inflation means that the prices of everything in your economy are starting to go up. And if the price of everything in an economy is going up, well, that means that people now have to pay more for the same things. If everybody is spending way too much on everyday goods and services, well, it's going to be harder to start making their housing payments. And remember, the mortgage moratorium for mortgages and rents is now gone. So millions of Americans who were saving a ton of money in 2020 and in 2021 now have to make payments on their mortgage. And many Americans who bought a home in 2020 and 2021 who were pushed to overspend on a home because the banks and financial institutions wanted to have more money to sell on Wall Street, well, they might start hurting too now. Because things cost more, their mortgage is always going to stay the same. That's a good thing if you have a fixed mortgage, but not everyone is going to have a fixed mortgage. Some people are going to have an adjustable interest rate rather than a fixed interest rate. If the Federal Reserve aggressively raises its interest rates, well, all of those adjustable rate mortgages are now going to go up. So everybody who thought they were saving a ton of money getting a mortgage in 2020 and 2021 might be in danger of losing everything. So the Federal Reserve is going to continue to be in the news because the Federal Reserve is walking a tightrope between sending the United States into a recession with a crashing stock market and housing market, or allowing inflation to get way out of control and hurt our economy. So what they do next is going to be super important for just about every market, the housing market included, in the United States in 2022. Everything that you do has consequences. Printing all of that money and lowering interest rates in 2020 and in 2021 had consequences. No matter what, the Federal Reserve is going to be facing consequences this year. There is no such thing as free money. Everything costs something. The question simply becomes now, who is going to pay for it? So again, while the housing market hasn't exactly been crushed just yet in 2022, it is kind of in a really strange place right now because there is a potential for it to boom or there is a potential for it to completely crash. It really just depends on what happens in our economy and what the Federal Reserve decides to do with its monetary policies. But now I want to hear from you on this issue. What do you think is going to happen with the housing market in 2022? Do you think that these monetary policies by the Federal Reserve are going to help the housing market to grow or are going to crash the housing market this year? In addition, do you think that the Federal Reserve is doing enough about inflation, or do you think that it should be doing even more to curb inflation in our country? Because while inflation has been this high before, it has not been this high since the early 80s. I don't know about you, but something should be left in the 80s. As always, don't forget to join the conversation and leave a comment below before you go. But that is it for me, everybody. I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.